Welcome back to the weekly review for calendar week 12. This week has really been something. Iran conflict escalates, Brent over $108, diesel for the first time since 2022 over $5 per gallon. The Fed keeps interest rates at 3.5 to 3.75%. The fear and greed index is at 15, meaning extreme fear. The VIX, or volatility index, is at nearly 27 here, which points to increased volatility. And it's exactly in such a phase that the wheat is separated from the chaff. Let's take a look today at what happened. The Iran conflict is dominating everything this week. Shell was hit directly, Pearl-GTL in Qatar damaged, LNG production at a standstill since early March. And that is one of the largest GTL plants worldwide. TotalEnergies has stopped production in Qatar, Iraq, and the Emirates. At the same time, however, new production is starting in Angola. Kiloma offshore field totally diversified, clever. Hapag-Lloyd is suspending all transit through the Strait of Hormuz and the Suez Canal. A war risk surcharge is added on top, and that is currently driving up freight rates. On the winning side, Chevron at an all-time high of $202, ConocoPhillips also at a 52-week high. Equinor with record production and around 4% dividend yield. They are benefiting directly from the disrupted shipments from the Gulf. Phillips 66 also at an all-time high. And here is the kicker. Goldman says the real bottleneck isn't crude oil prices but refined products. Diesel, kerosene, naphtha. Naphtha price up 50% to $875 a ton. Refineries are currently printing money. Energy is currently the strongest sector in my portfolio. Those positioned here are currently being rewarded. There's a lot of action in shipping right now. Genco Shipping rejects the takeover bid from Diana Shipping. $23.50 per share is said to be undervalued. Diana continues to push for negotiations. Takeover battle in dry bulk, this will be exciting. Hapag-Lloyd and Zim, a merger is up for a vote here. $35 per share for Zim. Consolidation in container shipping continues here. Flex LNG at a 52-week high of nearly $31. LNG demand is being driven by the crisis. Nordic American Tankers is selling an old tanker built in 2005 for $40 million. Shows you how strong the second-hand market is right now. Global Ship Lease has filed its annual report. 71 container ships, $2.24 billion. In contracted revenue. An average of 2.7 years remaining term, solid and visibility. Let's move on to the REITs and pipelines. Realty Income is making a strong move. A joint venture with Apollo for over $1 billion for around 500 retail properties. And that's smart. Growth without dilution, bringing in institutional capital. Realty Income remains the REIT king. Let's also move on to mining and raw materials. A mixed picture here. Gold lost 5%. In a single day on Wednesday. The Fed is keeping interest rates stable. That's no tailwind for gold. B2 Gold and other gold mines are under pressure here. BASF is opening the 8.7 billion euro plant in Zhanjiang, China, but the CEO is putting on the brakes. Profitability is coming later than planned. At the same time, BASF is raising prices for cleaning chemicals by up to 30%. Pricing power is evident here. Central Asia Metals with a strong EBITDA of $102 million but $117 million in impairments on the Sasa mine. Copper is doing well, zinc is currently a burden. BHP is getting a new CEO in Brandon Craig. A generational change at the world's largest miner. Leon Delbazelle at a 52-week high and is building a recycling plant in Wesseling for 250 million euros. But watch out, naphtha costs are exploding because of Hormuz, and that's squeezing margins in chemicals. Let's move on to dividends and BDCs. Dividend news of the week. Trinity Industries is raising its dividend after a strong EPS recovery. Chevron is increasing to around $7 annual dividend. Genco Shipping, strong balance sheet, high dividends plus fleet growth. Daimler Truck is starting a share buyback of up to 2 billion euros. And now to the BDCs. And you have to be careful here. Hercules Capital is under fire. 2 law firms are investigating potential securities violations. The allegation, inflated valuation of software debt, and too many PIK loans. Stock is already down 8% currently. Goldman CEO Solomon is also warning about the entire private credit market. Underwriting quality is declining. Blue Owl Capital is down 39% since the start of the year. Blackstone and Morgan Stanley are restricting payouts. And that's clearly a harbinger of what's to come when you hear statements like that. My take right now, BDCs selectively. Ares and Main Street Capital remain solid. But I'd look closely at Hercules before buying more here. Lufthansa, Goldman downgrades to sell, price target €6.60. Pilot strike over, but UFO cabin crew threatens a strike ballot. Spore personally buys 10,000 shares at €7.52. Munich is being expanded instead of Frankfurt. Buyer UBS upgrades to buy, price target €55. Positive phase 3 data on Kerendia for kidney disease. Several analysts are raising the price target here. PayPal, CEO kicked out, 10 billion in market value wiped out, down 20% in a single day, dropped from the S&P 100, multiple class action lawsuits, branded checkout growing at only 1%. VW, CEO Bloom praises China's planned economy, McKinsey scenario with radical plant closures, a €1,250 bonus for 100,000 unionized employees in May. Let's take another quick look at my dashboard here, but most of it has already been mentioned, that there's liquidity available here. So I'd say things are going very well right now. We can also take a quick look at the sectors to see where there might be a general inflow happening. Energy, utilities, consumer staples, industry, raw materials, real estate, money is flowing into all of them. In healthcare, it's actually flowing out now. Same for tech and finance, which is also part of what we just discussed. And in consumer cyclicals as well. Otherwise, we've already outlined the macro aspects just now. Liquidity index with inflation and so on. That and the unemployment rate, we've already included those. I've covered the news, the most important news stories. If you're also interested in reading a report like this as a PDF, feel free to just sign up for my newsletter here. You'll get this format there as well, so to speak. Just in writing and maybe a bit more detailed, I go into a few things a little more deeply there because the video is ultimately meant to be short and sweet, just to give you a quick overview. So what are the takeaways? From week 12, first, the Iran conflict is a game changer for energy and shipping. Those currently positioned in hard assets are on the right side of things right now. Second, the fear and greed index is at 15, extreme fear mode. Historically, these are the best entry points for patient investors, depending on which stock you're looking at. It doesn't apply to everything, of course. Third, take a closer look at BDCs. Hercules is having problems, the private credit market is showing cracks, and that's also what I hinted at earlier, that March will give us a lot of insight into what the banks might be reporting. Other than that, feel free to subscribe. If you like the video, if you're not a subscriber yet and don't want to miss any more weekly reviews or the current upstream series, then I'd suggest you go ahead and become a subscriber. Otherwise, as always, this video is not investment advice, it just represents my personal strategy. Everyone is of course responsible for doing their own research. Anyway, I wish you all successful investing. See you in the next video.